Good evening, all. Ira Epstein with your metal market update. And this particular update is for Thursday, and the date is November 10th, 2022, 6:50 p.m. Central Time. Got a little bit different on here for you. If you'll notice, it says currency report. Currency's on the move. If you go to our website at iraepstein.com and go into research, you're going to see that I put up a special report on the U.S. dollar index. Why? Because as the dollar goes, so goes so many commodities. This is the report that I think you've been waiting for me to do. I needed to get something out of the way when I thought the dollar might have caused itself to have a top. And yep, I am saying that word. I think the dollar has gotten to that point where we have a top. So how do you view the report? You can even click up here anytime during this video and you'll be able to see it. So let's go back, if we could, right now to the charts, see the data that's gone on. The dollar down 236 points. We were just in the 114 area. We crossed down to 108. I cover in the report tonight seasonal charts, price count charts, weekly, daily charts. So I give you a whole slew of information. I think you'll like the report. Now, let's go to the metal markets. If the dollar's down, that's generally bullish to metal markets, and it most certainly was. Can markets get ahead of themselves? Of course they can. Do they tend to? Of course they do. The gold has come from the depths of the 16 and a quarter area back up now to 1754. Yes. And what caused it? The break in the dollar. Not just today. The dollar's been breaking. That's the important thing. As you can see, it has lifted back up, and obviously today is the big lift day, because as we step back just a moment here together, you're up $40 today. Now, you had another rally like that the other day, and we said, uh-oh, this market's lifting off, and it's exactly what occurred. It's not easy to buy a market on those liftoffs. That's the very first thing to understand, so don't feel left out if you didn't get involved. A lot of people were left out. There are other ways to play. You could play some currencies against dollars, whatever. What's the difference, okay? If it's a lasting play, there's plenty of time to catch this. The trend is up, higher lows, higher highs. You went up for the first time and got through the 100-day average, the green line. I don't even have it back here. That's how long it's been since the summer months and the spring months that the dollar has gotten this high. Yes. The market now has one, and if we step back together for a little bit of reality check. Today it closed over the Bollinger Band. Yesterday the market closed at 1713.70 over the Bollinger Band, the high of that, and the day before. So you have 3 days in a row where it's done it. It's rare you get beyond 5. That doesn't mean you can't lift more for the 4th into the 5th day. Not saying you can't. The momentum's there, and you've got people caught short the dollar that are buying their way out of it. Will you embed? You haven't even begun the process. So you have an overbought market that's getting ahead of itself. That's how I'm going to label it. In a bull trend, support on breaks in the gold comes back all the way through here. Does that make sense to you? I hope so. It's a dollar-caused rally. Very important. And it's the first time we've seen gold act this way positively since the start of the Ukraine war. Remember, it went up on that news and it gave it up 1, 2, 3. You'd have to go back into March, and I don't have that on the screen here. That's what happened. This rally, now the question is, will it hold? We were talking. Go back on my videos here, and I said, you know, we've gotten an awful lot of sideways action. Is this going to be a base in the market again? It is. And that's the way to view the gold. The gold-silver ratio didn't move very much today as silver was alive. Now, silver's acting as a better chart. It's stopping at the 200-day average of closes with the Bollinger Band in an uptrend. Is it embedding? Okay, let's go and find out. You can't go by tonight, which is Friday. So we go into Thursday. Both numbers were over 80. Both numbers were over 80 on Wednesday. Both numbers on Tuesday were over 80. So you had Tuesday, Wednesday, Thursday. You're embedded. So what you're looking for now in the market is the first good break to see if the pros buy the market on the break, and that's what I'm expecting they'll do. If you've taken my enhanced Bollinger course, you know there's a caveat to it, and we'll have to see if the market goes through today's high or not to know how to work with that. In the copper market, overbought, riding the upper Bollinger Band, the Gorilla Glue trade. We mentioned that I think it was yesterday we were talking about it. You have 1, 2, 3, 4 days in a row. Then today's the 5th day in a row, and it looks like you're going to hit it tonight. So you've done that. Are you going to pull this market to embed? Again, everything in the world priced in dollars. If the dollar has peaked out and coming down or stable and no longer going up, those goods look cheaper. The dollar doesn't have to collapse. The question is, has it stopped going up and just pressuring other markets all over the world because of its rise? That is what you have to focus on, and I do that to a degree in my report tonight. You're embedded in the platinum. You have the Gorilla Glue trade. So it's a question of getting those first breaks in the market, and they'll come when the market acts a certain way and you're able to buy the break. Would I tell clients to buy over a Bollinger Band ever? I promise you it's not going to happen on my watch. In the platinum, you've done a flip-flop. So the market, when it took out this high, which it did well before today, and you can see this as we step together right here, we were talking, I said, you've ended the bear trend, you lost the embedded reading. The goal was to get up to the upper 18-day average of closes, upper in the sense off the lower band. That ended the downtrend. Now, if it wants to get alive and run, you have these numbers as potential that can kick the markets higher. We also talked about, and I didn't cover it tonight, are we going to get crossovers in key moving averages in the metals? We'll cover that tomorrow or Monday. We'll get into that. But suffice to say, this is what you've got. Even the palladium. Look at how the market's lost its embedded reading back here. The next target, if it continues, to the upside right through there. And again, these markets have caught the shorts. That's very important to understand. In the dollar, would I tell you to go short under a Bollinger Band? No. You know that I often say the first challenge of a 100-day average and a Bollinger Band together where pros take money off the table. You slid through it. Doesn't mean you can't flip back the other way. If it's going to keep going, then the 104.33 level is the next potential target. But I have some other numbers in my special report. And I think that's the key you want to understand. I created this report today. It took me a good part of the day. And I did it because I think that it's so darn important for everything you're looking at. Remember, the falling dollar helps the stock market. The falling dollar will help the commodity markets. The falling dollar helps foreign countries. People don't want the dollar to keep going up indefinitely. So I show you the seasonal charts, the 15, the 30, and the 5-year. I'm showing you the events that are taking place right now. This is super time sensitive. It's only up on my website 3 business days. That's what I believe in. So if you want to see it, all you've got to do is you can click through this video. And by the way, to do that, the easiest way is just click the very top up here. There'll be a cursor. Give it a click. It'll take you right to the area you have to be at. Away you go. You can go to www.iraepstein.com. You can call my brokers if you need help. But there it is for you. I'm Ira Epstein. You have a great day. It's exciting, and I can't wait for tomorrow. You take care.